Ladies and gentlemen, the next item on the agenda is a very important and a very pertinent roundtable discussion on the recent policy announcements on bullion in India and their impact. Right now, introducing our panelists for the roundtable. First and foremost, the moderators of the roundtable. Please put your hands up as I invite Mr. S.K. Jindal of Jindal Group of Companies and Mr. Shekhar Bhandari, Kotak Mahindra Bank. Our panelists for the roundtable, Mr. Rajesh Khosla, MMTC Bank, Mr. Pradeep Nagori, Edelweiss Metals, Mr. Rajan Venkatesh, Scotia Bank, Ms. Neerja Nigam, State Bank of India, Mr. Bhargav Vaidya, B.N. Vaidya and Associates, and Mr. Amar Singh from JP Morgan. Ladies and gentlemen, with this, I leave the session in the hands of Mr. S.K. Jindal and Mr. Shekhar Bhandari.
Good evening. Friends, what a awesome inaugural session, which we all enjoyed thoroughly. And my special thanks goes to His Excellency Mr. Samuel Panian Yeli, High Commissioner, and Mr. Idrisu Tahiru, Consular from Ghana Embassy. They were very kind enough to accept our request. When I met them in Delhi, as he rightly said, Ghanaians are very friendly, and he took not more than a minute to understand the thing, and he said, yes, I will come. This is about gold, so we will be with you. Goa, we will come there. And immediately agreed. Before proceeding, I would like to thank Mr. Grant Angwin also, Ms. Ruth Crowell, golden lady in the red dress today, but having come from all this distance from London for us and encouraging us for this special event. Thank you very much. Mr. Michael Misarik is a magician. Normally, all of our gold suppliers were talking about premium, 1 cent, $1, 10 cents, $1.20 for gold. And he is such a magician that instead of selling gold, he sold the whole refinery to India. Very interesting development which we have seen in this year, that the largest refinery of the world bought by an Indian company, and we don't know what has actually happened. Mr. Michael Misarik has taken over Rajesh Export, or Rajesh Export has bought the refinery. Soon we will know the facts. Gold anybody can sell, but refinery not everybody can sell. Friends, we have this wonderful panel with us. All are veterans, all are leaders in their own right. You will have their perspective on today's topic of recent policy announcements on bullion in India and their impact. We have been told to touch upon GMS, Gold Monetization Scheme, Sovereign Gold Bond Scheme, GST, gold coins, Indian gold delivery, import duty, PAN requirement, and foreign trade agreements. These are the issues of national importance, but most important national issues we have been asked not to touch upon, which will not be touching upon: Rahul Gandhi and his future, Sushma Swaraj we will not talk about, Vasundhara Raje Scindia will keep mum about her, and Bihar election only if Amar wants to say something. These are the topics which we have mentioned in the beginning itself to tell you the format so that you can keep your questions ready. This is one panel, a little bit on this side and balance on the other side, and we would like to have a very interactive session with all of you together. To start with, as my friend Shekhar rightly put in perspective the things, so we start with Gold Monetization Scheme, a very, very important scheme announced by the government. We are very optimistic about it, but we need to understand pros and cons of the scheme, and here are the experts who will share their insight, their wisdom with you on the subject.
Our panel is very distinguished if you were to see it across. 3 bankers, 2 refiners, the people from the trade, I think being over here, an international banker, and I think a few of us, I think we say that we don't know anything, but we would like to contribute in whatever manner possible. I think from the left, I think is the expert or the policy expert, Mr. Bhargav Vaidya. He is the noted person who is referred by most of the industry people in terms of what is being done, what has to be done, and did the interpretation side. Yeah. Pradeep Nagori, I think the gentleman who is setting up a big refinery in India from Edelweiss. I think welcome Pradeep, being a veteran across. Rajan Venkatesh doesn't require, I think, a formal introduction, but I think the Scotia Bank, the bank which has been here on the gold side right from day one, I think they are the ones who have taught the distribution and the gold business in India. So I think welcome Rajesh, welcome on the panel. Mr. Khosla, I think we were introduced to him, no big introductions, except that MMTC PAM is a creation of Mr. Khosla. And that is, we call the epitome of India as of now. The lady on the panel is Sneeja, and from the biggest bank in India, the State Bank of India. Thank you, ma'am. Thank you for joining us. She also is the one, I think, which will, I think, gold monetization, if someone has to learn, one is to speak to her. With a decent amount under the gold monetization part, which she has been able to mobilize, convince the government, have a good amount of gold being from temples, coming over, refining, giving it to jewelers. I think she's the one who has been instrumental from the State Bank of India side. Amar Singh represents from JP Morgan for us, and being associated with India for now 20 odd years or 20 plus years. So you'll excuse me in case I think, because you're too young to look 20 years in the industry. So besides that, I think understanding India and the international part and brings the entire international perspective for us. So I think welcome Amar, and I think welcome all.
GMS, as we look at, is a means of advancing growth of India, employment, social inclusion, economic wealth of nation, creating jobs, developing skills, generating exports, anything and everything positive about the country's growth program. Any asset, let it be gold, if it cannot be utilized, it is not a good asset. Until now, 22,000 tons or 25,000 tons, that is not a question here, but all of this gold was not being utilized in a proper manner. It was lying idle, it was not supporting our economy. But now with these schemes, we see some light coming in, and we are quite hopeful that this will do wonders for our economy, and this will bring the desired results to our economy and its growth. And as the courtesy demands, as the protocol demands, my first question goes to the lady. Madam Nirja, would you be so kind to share your perception on this, because you have studied a lot about gold monetization scheme, and we know you have a well-developed concept how to put all things right and how to proceed with it. What is your sense of gold monetization scheme, and how do you look at it?
I feel gold monetization scheme can be a success, but it has to be a win-win for the customer as well as for the banker who are going to implement it. So yes, government has tried to change. One is of course the logistic issues. The bankers are not really, they cannot deal so much in commodities. So by having the refineries come in, by having the assaying centers come in.
Bankers cannot deal in commodities? JP Morgan.
No. I mean, you know, when you tell me to 50 grams of gold if I have to collect in say a place like Shegaon and bring it to Mumbai, that is a bit of a problem for me. That was one of the reasons why, and we put a 500 grams as minimum, which was criticized a lot by the government, but unfortunately giving our constraints.
And what is the final quantity decided now?
Now it is 30 grams.
It will not increase?
No, now if it is the assaying centers and the refineries. So the network is there, which a bank branch cannot do, whereas assaying centers and all, they're used to dealing with gold. So I believe they will be now more successful. So the logistics part, I feel, is more taken care of, and if the customer also, he can see that his gold is being melted in front of him, if it should happen like that. And within a reasonable time, he should be able to see, okay, it is my gold and nobody has tampered, and okay, only this much of purity and this much of grammage, it will satisfy him more.
So you have faith in the scheme?
Yeah, I
Yes.
have faith. Only now the bankers part also comes in. The other thing is that how to make it economically viable. So they have tried to, put in the CRR, and if they have some more ideas about it, then maybe yes.
And how many grams you plan to deposit in this scheme? You personally?
No.
If you deposit, everybody will deposit. If you say I will not deposit,
Okay, I will deposit.
you
Fine.
will deposit. Thank you very much.
Thank you, ma'am. I think that's a good insight as far as the Indian consumer is concerned. Yes, generally it is felt that the lady may not want to deposit, but yes, there's some part.
If I get 2% interest, why not?
Excellent. So I think some amount of incentive for the consumer.
With 2% you will be satisfied?
Yeah, after all, at present, what is happening? I'm paying a locker rent, which goes on increasing year by year.
Sure.
Even SBI used to have a locker rent of 350 rupees per year at one time, which has now become 5,000. So.
Yeah, thank you. I think a good insight. Pradeep, I think you'd like to add on that?
Yeah, sure. For me, I think the GMS would work only if it is, awareness. First of all, is if it is spread properly and people are aware.
Awareness amongst consumers.
Awareness amongst the consumers,
Yeah.
because the last scheme failed, as we all know. Obviously there were many reasons, whether it was the minimum quantity required to be deposited and the returns and the way the scheme was structured. Fortunately, at least the current scheme which has been published, or the white paper which is there, it looks that it can become successful. The key is actually how much return is given to the customer. Obviously, with 2%, I don't know whether the customer would want to part away, because the customer today doesn't look at his real return, but Indian consumer looks at only 2%.
Can you explain the real return, how it is different from this 2%?
Yeah, see here, if you look at gold as an deposit and the return on gold, you are actually technically hedging, or you're putting your gold in dollar denominated rate, right? Having said that, what you are basically protected against, if you are invested in gold, is against inflation in the country. So effectively, even if today the government gives 2% or 3%, effectively the real return for the customer is actually 2 or 3 plus the inflation rate. But the customer doesn't look at that way.
And some tax benefit also we are hearing?
Today we are not, the scheme is not clear that the tax incentive is there. So that's where I'm saying, the scheme can be successful only if there is a tax incentive. For example,
but if we compare with the international rates of gold leasing or gold interest rates, is 2% not enough?
That's where the consumers will have to be made aware that 2 or 3% is an excellent return for them. The way Indian consumer looks at is not that way, right?
Indian consumer may not be aware that international rates are 0.25% or something.
That's where the banks will have to also again, come into picture, because banks, if they pay more than 2 or 3%, the scheme may not be viable for them. They can easily get probably 1.25% or 1.5% gold from international market, then actually paying 2 or 3% to the Indian consumer. Plus they have a logistic cost of another probably 0.5% to collect that gold. So the effective their cost would actually go to 3.5% to 4%, or 3.5% if they have to pay 3%, and if it is 2, then the effective outgo for them will be about 2.5% to 3%. So it may not be economically viable for them. So that's where the key for the success for the scheme lies there actually. How economically viable the scheme would be for consumer and the banker. You'll have to find a midway there. And obviously that's where I'm saying that it will have to be, the awareness will have to be spread accordingly. The Indian consumer will have to be taught that, even if you get 2%, it's a great return, or 3%, then it's further better.
Do you agree, Madam Nircha?
Yeah,
To give to them the customers, and 4, for loan, what kind of rate you are looking for? Giving the gold on loan basis.
Actually, as a bank, I won't be able to give 2% because as he says, the leasing rate is 1.5 or even lesser than that. But if I am allowed CRR, allowed to keep it as CRR rather than
You have doubt about
giving
that?
it as a metal gold loan. Secondly, metal
Yes.
gold loan, we don't know what is the market. I mean, if I get tomorrow 200 tons or 300 tons, that may not be the market. So
And,
it has to be alternate.
And I think the government has already gone on record, at least, said that, they still are not clear whether the gold collected by the banks would be allowed, against CRR or SLR.
But what stops them from doing it? Because internationally it is being accepted, no?
No, this is Indian regulation. So the Reserve Bank has to allow, the banks.
So the important thing I think which comes in for the customer, I think 2% or 2.5% is a minimum thing which is required. So you need to keep the customer happy. You need to ensure that there is enough business case for the banks to do this business. In case I think banks want to do this, then there are processing and the cost of holding, taking till the time I think you lend. Bank needs to have enough amount of margin for them to do this business.
But customers will be expecting a compelling rate for them to bring this gold here, no? If you want to give it 1.5 or something, they may not agree.
They may not be ready, yeah.
So give them a good rate, no?
It's not
But
economically
actually,
viable
I'm
for
a
them.
commercial bank.
They are in the business
I
of
need
making
to
money.
make some money out of that.
Yeah, I mean, government actually can think about, interest subvention probably. They can actually, incentivize banks to say, okay, give them 2% and 0.5% will be probably from my side. The way they are actually doing it, for example.
The way it was done for the FCNRB deposits when they wanted to have
yes.
something to be mobilized.
Perfect.
I think they gave a good amount, for some period, so that it
subs-
can just take off.
So the government will have to.
In
I
the
think that's a good
beginning, as a
suggestion that
helping hand to
government should
start with.
consider
They'll
some
have to
subvention.
come up with a subvention scheme or some tax incentive for the depositors of the gold. And again, it will have to be made in a way that logistically also it becomes convenient for the customer.
राजेश जी, आप खामोशी से ही बोलोगे कि कुछ बोल के भी बताओगे?
No, you know me, I'm a contrarian in all of this. Two issues. Let's look at the positives. Finally, we have a government that is willing to look at gold, that is willing to see how best to manage it. And doubtless, in this learning curve, it will make some mistakes and some corrective steps will happen. So, I think what they're doing is great. Of course, the devil is in the detail. And the flip side to this is, and we've been having this debate, let's not get into paralysis by analysis. Let's start. Let's see what goes wrong. Let's set it right.
We agree with you.
If we think that we are going to get the entire Taj Mahal structured instantly, it's not going to happen. So all I can say is be patient. Look at the plus, and the plus is this government no longer thinks gold is a four-letter word. This government thinks gold needs to be managed.
They have given us 30 minutes and you want us to be patient, huh? Thank you. Thank you very much. We agree with you. International perspective from you. How you look at sitting outside of India and how you look at this issue?
I think, first of all, from the international market perspective, we believe, or the way we look at this is, it's a very positive development. Definitely, that's how the international world look at. Finally, somebody is looking at considering. And I think there are two key issues which India is struggling because of many reasons which is known to us. One is the gold, which how to get into the system, which is monetization, and the second, how to get future gold, not in physical, in another form. So coming back to monetization, I think the way I see, and I have worked not only from the international perspective, also in domestic. Two things. One, logistical issues, as ma'am said, it is a really, really big issues. And working in a bank, particularly when you go to the risk committee, you will appreciate those. So I think some of those issues has been sorted out, and it's mainly because, let's say, a LBMA refinery is there, and some more BIS, or let's say even they are setting up these collection and melting. So at least the confidence from a banker's perspective is there, as well as I think likewise the consumer. Definitely logistical, I think to me, the biggest challenge is the policy. I think and policy I don't think anyone can make today which is 100% perfect. I think what is required from the people and particularly from the local bank is a commitment to that this is something which government wants and we believe in it. I think rate 2%, 1.5%, 2.5%, 8.5%, it is a function of market. So today we are talking if inflation goes higher, interest is 12%, maybe 6 also will look lower. So I think what we are saying, these are something which as the time passes will be addressed upon, but key thing is policy, let some policy come out which looks like coming out. Then these people look at some long term, as Mr. Khosla sir said, be patient, have a long term strategy and believe and put up some commitment to the business, and I think definitely I agree with Nirja that it is possible.
But Nirja has already committed that she will give.
So I think the
gold.
panel says very big positive, and I think the consumer saying we want to do it. I think I'm ready to part with my gold. The panel says, I think, have faith in the system. The government has taken the right steps. There are small challenges which I think the policy.
What do you say about why the RBI cannot consider it for SLR and CRR?
I think they did debate on considering it for CRR. They may have a timing issue. Otherwise, I think the Reserve Bank is quite open and very, very pragmatic. I think it is a step going in the right direction. It's a timing which will, I think, it will.
If they agree, life becomes simple.
Of course, I think the banks will just jump into it. So,
yes.
I think when we do a business case with CRR, I think it's an excellent scheme. Personally, I think we would like to jump into it and try to do whatever best we can. And or there is something else. I think government will come with something. I have total faith in that.
All right. So, on KYC front, Rajan, would you like to say something on KYC front? How much gold? What kind of KYC they should do with those who want to deposit or something?
I'll address the KYC front first, but before that, I have just 2 points to make. One is everybody keeps saying that let's pray that this scheme will be successful, etc. For anything to be successful, to my mind, having seen the scheme that was there 10, 12 years back, and some changes, some of it is cosmetic, some of it, they made some reasonable changes here. It has to be two-pronged. One is the logistics and the assaying and the collection. Forget the refinery. We're all comfortable with the ability of the refining capability there. But the mobilization part is the biggest problem. Okay? And that needs strong coordination to be able to garner that stuff. Because as we all know, almost 75% of the gold consumed in India is not in the metros. It's in the rural, really rural areas. Okay, so that's one aspect. And the second aspect is, I just wish, and this is my personal observation, given the perennial reluctance of an Indian lady to be able to part with her jewelry.
No, lady says she is not reluctant
She could
at
be
all.
an exception. I'm talking about India. So, ideally what the government could have thought is, do it as a dual scheme where people can either deposit their scrap jewelry or they can deposit cash and get a gold certificate. Now, the issue probably then would be, if they are going to deposit cash, then it's going to increase imports, but there are ways to tackle that. You could still accept cash, give a certificate in gold, and make sure that it doesn't damage the CAD.
But that's what brings us to the next one, which is the sovereign bonds, which is very similar in
I know,
nature, which the government thinks about.
But what this would have done is it would have created a psyche in people's mind saying, okay, if I deposit cash, at the end of the day, it's denominated in grams and I can get that much of grams from somewhere. So it makes it easier for people to absorb the fact that there is a scheme where instead of buying gold, I can place my money and then on the maturity date, I can get back.
With the jewelers, I think it has been quite successful. The same part.
In terms of KYC, banks, this business, entire business is considered high risk, okay, internationally as well as locally. So therefore, banks go through the KYC is not extraordinarily different from what one would do for a normal business account, etc. But KYC is not that big an issue.
No.
From a banker's perspective. But the important thing
Income tax, they will ask questions. People may be afraid on that front.
But that's between the tax authorities and the investor or the person who's, as a banker.
No, I'm not saying as a banker. We have to look at this as proposal as a whole. If income tax goes tough on it and they start asking many questions, declaration of source, etc., then it may not be successful.
Absolutely.
So it can be a big hurdle.
It can be a hurdle.
Income tax expert you are.
I think if you go down and deposit cash in bank also, the same questions will come. So it's not different. And as I think
There should be some limit that up to this gram, there will be no questions.
No, I am not in favor of that, because to me, as we discussed here some minutes ago, that 70% of the gold is in rural India. Most of them don't have any tax paying liability as they have agricultural income. Then why should we worry? The tax should be the last question. We are not here to give a scheme to convert black money white. But what is official gold? If it comes into the system, it's easy.
No, the objective is to make system simpler rather than saying that it is cash or non-cash.
Even in any deposits, it's only above some threshold that there is reporting.
Perfect.
So that same monetary limit can be continued. There need not be a separate thing for gold.
And current thresholds of 500,000 and 200,000 looks reasonable and quite good.
Ms. Ruth, what is your view on this scheme, this policy announced by our government? You like it? You think it will be successful? How do you see it?
I think, as the panel has mentioned, it's a really positive step forward that the government is embracing this. The Indian experts are going to be the one whether or not this scheme is going to be successul. But I think I would echo Rajesh's points in that you have to push forward and you have to try. Let's start and refine it. I think that's the most important thing. But certainly the commitment by government is very positive, and as the gentleman from JP Morgan also mentioned, from the international community is seeing this as a very positive step.
If you have some stuff, you can also deposit in this scheme the moment it is announced. You will get good rate of interest which no country in the world will give you.
I think that brings it to the investment side, which is the sovereign gold bonds.
Yes.
The investment demand in India is around 30%, around 250 odd to 300 odd tons. And if it is 250 odd, 300 odd tons, the objective of the scheme is to ensure that why to have gold imported, exchanging gold, why a certificate deposit which is denominated in gold and interest in gold terms, and why can't it be paid to the customer, whether it is for 1 year, 2 years or 3 years. I think the thoughts from the panel are the same.
Mr. Rajan, please share your perspective on this. How do you look at this sovereign gold bond scheme?
The sovereign gold bond scheme as announced or as the draft as it's come out from the government seems to be a workable proposition. Definitely it seems to be a workable proposition. Now, the big challenge there is distribution, and I think they've got that, but because they're talking about post offices, they're talking about bankers, they're talking about NBFCs, everybody, whoever are there are part of the process in distributing it. Okay. The issue there is in terms of cost, not from I'm not talking from a banker's perspective, but I'm talking from the government's perspective, in the sense that the draft did say that up to 50 tons, we may or may not hedge it. Okay. If it is not hedged, then it becomes a far more viable scheme. But if the thought process is that, oh, we cannot take that risk and we need to hedge it, then it becomes a totally unviable product, because the hedging cost becomes very, very prohibitive. Okay.
So in the current draft form, which is up to 50 or 100 tons, I think looks okay. Anything above 50 or 100 tons of threshold, I think the thought is that it may be unviable as far as the government is concerned.
The second aspect of it is also you have to remember that in India, over the last 12, 13, 14 years since the banks have started giving age, for some strange reason, while there is 900 to 1,000 tons being consumed, the lending market is less than 5% of that.
Correct.
Okay? It is expanding, it's definitely expanding, but over what time horizon? That right now, if you ask me what would be the gold loan market in India, I would roughly guess it at around anywhere between 40 to 50 tons, max. Even 50 could be an ambitious number. Now, you will mobilize something only if you can deploy it.
Fair.
Only if there is an incentive for you to be able to deploy it. So if there is an interest cost, and what Amar said is agreeable, because interest cost is a function of markets. There have been instances when gold lease rates have gone up significantly, silver lease rates, and some of the people in the audience will be able to say that silver lease rates have been 20%, 30% plus at sometimes. So that's, let's forget the interest side of it. But the mobilization, success of that mobilization will depend upon how effectively it can be deployed.
I think what we understand preliminary, the distribution seems fine, the scheme seems, I think, workable, and especially on the, I think even the State Bank of India has committed that I think they can take the entire part of distribution in case I think others are not agreeing in terms of what we understand, which is I think very healthy development. And we ourselves feel that I think a similar distribution is very much possible.
Bhargav, you concur, you differ?
I would perhaps say that of the two schemes, sovereign gold scheme is the only scheme which is workable
and
as on today.
Yeah.
As Rajan had rightly said, that let's have a scheme where you ask people to deposit money. What I'm actually worried is that we may have people buying more gold because it becomes so very simple to buy gold in this format. If somebody asks me that, please get me 5 grams of gold, it's a headache, to go to the market for him and do it. While here the distribution system is in place. And one point I'd like to stress here, that even if there is 2% interest rate paid, the present small saving cost of funds to the government is somewhere near 8 or 9.
Yes.
And even if you hedge, after paying 2% cost of gold, we are not far off from what the cost of funds is there.
Current range which the government does.
One good thing that they have carefully said, before Amar says that a person like Amar or Ruth cannot invest in the scheme, and even Jindalji can only invest to the extent of a very small limit. So I think government itself knows this is likely to be very successful.
I think given the enthusiasm, the government is thinking they would like to put a restriction on the maximum amount which can be invested, because they foresee significant amount of demand in this particular side.
We would love to see that these schemes, these policies get to see the light of the day.
Yes.
But Shekhar was showing me timing and I don't have a watch. So GS, you please excuse me that I don't have a watch. But if you want, you can start counting 30 minutes from now. Amar, please give international perspective on.
I think I agree with most of the people operationally. This is almost ready kind of a scheme which can be launched tomorrow. But the challenges are, like as he said, the cost and capacity. And these two things suggest, as an international banker and some of the experience of the rest of the world, particularly China, I think some more product in parallel. So it's a good beginning. I think it's ready. People should look at, and they are going to, distribute through channel like post office, NBFC, banks. And I think 50 ton, as everybody is saying, is really a small quantum what we are talking about. If we look at just Shekhar said, every year 250, 300 ton goes into investment. So in my view, it's a ready, let's start, but parallelly what other option has to be proposed and discussed with the regulators as well as government is by the local banks, which is in the form of, as Rajan suggested, client can deposit cash take gold, and that gold can be channelized into the economic use, which can be gold accumulation plan, which is a very successful product, particularly in China. I think this will always have a issue on capacity because of the cost, and the second thing is particularly on the hedging cost. So I think some more product work parallelly need to be done, like gold accumulation and plan and so on. I think that is where the bank need to work upon.
But I'm happy to share, Amar, that the Reserve Bank of India has thought about, I think, a few more variants, and I'm sure, I think a few successes will help them to probably launch a couple of more. But the good part is, I think they're thinking a lot and they are very open for it.
But all these schemes, they are good for bringing some stability to our economy, our trade,
and our business. So that it doesn't allow them to think something more.
And we are not dependent only on physical gold, paper gold and other products, which we have been asking for such a long time.
Perfect.
And now government has been kind enough to agree to some of them. And let's see if they can see the light of the day.
I think just one thing I would like to add here. I think since I have been associated with this market 1999, and I have seen very least development or effort from the banking. I have been also one of the earlier related. So I think this is a time when bank has to really take one step forward, and that means rather than just doing physical, has to take, the moment they have to do gap means they have to have a trading international, because as Rajan said, India bullion loan industry is a 20 ton, 30 ton or 50 ton. But if let's say they mobilize 100 ton, even on monetization or on these methods, what are you going to do that? So you really need to look at the international perspective. It means efficient bullion banking / treasury need to be evolved around the industry. So things are moving, like refinery, logistic and logistical issues. But I think I really think that local banks, 7-8 local banks have to come forward and really focus on the bullion banking. That's one of my suggestions.
Madam Nija, would you like to add some one-liner on this?
No, I would just say yes, it's a very good scheme. And I'm sure the moment they announce, I feel within 1 or 2 months they would reach their 50 ton, and then there'll be clamor for more. This is what I feel.
I think the general perception is that it is, people are going to rush for it because they will fear that it may not continue after some time, or they may miss a chance. Yeah, Rajesh.
You know, essentially the sovereign gold bond, if you see it from a government's perspective, government has an annual budget to borrow money. There is an annual borrowings program of the government.
Yes.
Don't for a moment think that the sovereign gold bond is going to be outside the annual borrowings budget of the government. The government again is experimenting and saying, can I kill 2 birds with 1 stone? Can I sort out the gold issue, and at the same time can I find a cheaper way to borrow money?
Perfect.
Time will tell whether they will succeed or not.
But the current limits are less than 3% in terms of whatever they are estimating at 100 and 150 tons.
I think over the years, a lot of economic theory has been challenged and will continue to be challenged. And it's no longer seen somewhat, what shall I say, incorrect if you run a budgetary deficit.
Yes.
The US is the largest budgetary deficit in the world.
Yes.
And they're doing pretty well.
Perfect. And I think everybody looks upon them. Still,
let us hear what Madam Harshika has to say on this. What is her perception on this sovereign gold bond scheme? How do you look at it? Good for India? Possible for India?
So certainly for the economy of India, I can totally understand why the government want to pursue this, and I think it's a good. It's something which is good in addition to the physical import activity that goes on. And the reason I say this is we all have to remember why people actually buy gold in the first place. So if of the 900 tons that gets imported every year, a lot of that goes into jewellery, then does a parent, when they give their child jewellery, when they get married, want to replace that with a piece of paper which entitles them to some gold in the future? So I don't think we can discount all the cultural and emotional elements that go with actually buying gold and giving gold for the future.
And this is JP Morgan view or Harshika's view?
It's Harshika's view.
Thank you. And can you disclose how many tons JP Morgan is giving to India? No, no, you don't have.
It's too big.
Thank you. John, we want to hear from you. What do you want to say on this scheme for us?
Well, my question...
And in the end, you wish us best for the success of this scheme.
Oh yeah, of course. Goes without saying. To me, it relies on I can't provide the same level of expertise as is on the panel up there.
You don't agree with them?
No, I do. But my question to you, Mr. Jindal, and everyone else is, how do you persuade the temples to hand over? My question
If you give them money,
yeah,
they will give you gold.
So this is my question.
You show me money, I give you gold.
Is this gold sacred or not?
Money
I'm
is
talking
sacred.
as a money sacred.
I tell you.
Okay.
Suppose, imagine, this temple has no gold. Who wants to go there? Nobody wants to go there. It is because of the gold we go there.
So will the temples hand over their gold?
You see, I tell you secret. When I enter into my colony, the guard at the gate, it is not to me, to the car.
Everyone does that to
the
you.
car. And if I go in a small car, he doesn't look at me even. So this is the effect of the life.
This is my one question. Will temples hand over their gold as part of this scheme?
John, can I interrupt that? 1999 is when the gold deposit scheme was first launched. We're in 2015, 16 years. All the temples of this country put together have not yet mobilized 15 tons of gold. So my answer to that is, it really doesn't matter. Because the scheme is not for the temples of India. The scheme is for the millions of India. The temples will not be worried as to whether they deposit gold or not, because the temples don't really look upon gold as a means of revenue. However, the millions of India who've got the 20 grams and the 30 grams will find better use for it. And that is the genesis of the modified scheme.
True.
I think just to add on with Mr. Khosla said, 1 year back, the gold from temples in monetization scheme was 5 tons. As on today, it stands at 15 tons. So in 1 year alone, there is a 10 tons of gold which has been parted by temples in India under the gold monetization scheme. But still, is it successful? No, I think it is still, I think you're scratching the surface. This is immense opportunity. But gold monetization is not for temples alone. Yes, one would want to have it for them, but I think all the millions of people.
Shekhar, my question to you now. You as a temple have got 100 kilos of gold.
Yes.
Many temples have more than 100.
Yes.
Today you don't deposit it. You say, no, I will keep it in the temple. Tomorrow people will ask you, after 1 year, this could have become 102 kilos. Why you didn't do it? Don't you think this question will come to the trustees or the people that why you did not invest this gold through banks, and everything becomes black and white, transparent, good for the institution, good for the temple, and why you should not be looking at 102 kilos of gold after a year, apart from what are you collecting during that year?
So 102 plus free storage plus free insurance.
Yes.
However, if millions of people get educated, when they are aware, they will have a right to ask a question. As on today, they may not be aware. They may not be knowing.
And why temple has to tell every devotee who is coming that we have sent gold to the bank? It is their own prerogative. The trust will decide in the benefit of the temple.
They have done that for last 10 tons, which in my mind is a very good development in last 1 year.
And after 1 year, he will get 102 kilos instead of 100, and 2 kilos is a big money.
Yeah. And I think Ms. Neeja will say, I think, yes, temples have given it to them. So she did not disclose the quantity, but I think that is a very clear example of, I think, the way the temples have moved ahead.
We bring it to temple, temple bring it. This is a larger temple,
Of course,
a bigger temple.
This is the biggest temple.
Because they have money, so temple is bigger. Thank you very much for deliberating so well on this. And now the one more important point of GST, which we all are looking forward to.
Goods and services tax, the government of India's biggest agenda to ensure that the states and the business moves on. Yeah.
And we would like to know how would it change the way business is done. In the words of Mr. GS, will it be beneficial for our sector or not? The slabs, the raise, the policy, will it see the light of the day? Again, the question is, and who is responsible for that? That if it is not seeing the light of the day, is opposition which is holding up and not letting us see the thing coming in. So on these fronts, I would like our expert and big expert, Bhargav Bhai, to share his perception and enlighten us on what he thinks about this.
GST would be a double-edged sword for our industry. I think there's a lot of responsibility on all of us, on you maximum, Mr. Jindal, that we make the right representations to the government so that we are not caught as a very silent minority and we pay a penalty for it. One thing, what it is expected to do is to have a very smooth flow of the goods from all the sectors. I'm not saying not only bullion, including jewelry. It has to address all the jewelry issues also, then only a GST would be successful. Because if jewelry, the last point of consumption, GST is not favorable, then the entire chain breaks. GST could be used very, very effectively to support the earlier two schemes which we are talking about. You know, if the GST rate is high and the way gold monetization and the way gold sovereign bond scheme is done, we will be forced to go and deposit our gold with the gold monetization scheme. Because let me just give a small example. I'll take one more minute of your Sheikh. That if I have bought some jewelry or some small gold of 5 grams or 2 grams in past, and I go back and give it to the jeweler, and sell it to him, for him it will be a unregistered purchase or something which is, he has to give me the final gold price which is selling at less the GST rate, which may be for jewelry 11. In Kerala for jewelry it is 5% just now.
Correct.
If you melt and sell, you lose that 5%. So in the same way, the best thing which has happened in the present gold monetization and other scheme is they have said it is tax neutral and the paper will be tax neutral. So this may be the biggest flip to any institution or any organization which is doing this scheme. That when I'm giving it to this particular scheme and then selling that paper, I'll not lose that URD purchase.
Or as an industry, we need to ensure that we are able to take care of this.
We have to take care of this throughout. Or we have to say this industry is taken differently. We have one very, very sad animal which has walked into the parliament through and got into the GST Act, which was not on the white paper. I think this IIGC has walked in from somewhere. It was not on the white paper, it was never debated. And first time in India, we have got something which was not in the white paper but is in the draft bill. So that if a bank like, with Rajan, with your permission, can I quote your bank? Scotia imports something in Ahmedabad and transfers it to, say, Mumbai and other places. The way the draft paper is just now, it may mean that there's 1% interstate tax. I know from the council and other places we have been addressing this. But there has to be a very clear lobby that if it is an imported item, there is no interstate tax. One very important thing which for the refinery sector we have to take very good care of, that whatever benefit the refinery is having over and above any other consumption, like 1%. If that thing is, I am as a jeweler selling it, or I am at Uttaranchal and I am paying lesser thing, and it is coming to the market, that that 1% or 2% incentive is built into the credit to the further chain. So the chain management has to be very good, and the representation from the industry also has to be strong and in one word, so that it doesn't get disturbed. I'm not saying that we appoint lobbyists, but there has to be a very, very clear system that we don't drive this business underground by putting a GST of 12%. Let's take care of it. It is a very good scheme. If used rightly, it will bring transparency across the board and also develop paper gold.
So as I understand, I think make it simpler, make it, I think, a bit transparent, ensure that I think the nitty-gritties are taken care of, be it for a jeweler or for a refiner. The payment bank will be a good addition, which will ensure that every transaction is tracked, and there are a few things which one can go back to make it simple. But yes, I think Mr. Khosla.
Rajesh, what do you think, what will be the big difference before GST and after GST?
Let's not for a moment think that the GST is only going to impact the bullion industry. The GST is going to impact the way business is done in every commodity in this country, of which we're deliberating gold. So please take a macro view on this.
You see revolution coming in business?
No, I see for the first time the possibility of having one India and not 31 different Indias. Because
So will
today,
it
from a
revolutionize
taxation
the trade?
perspective, there are 31 countries within this country. So just to bring the entire country together under one taxation scheme, I think is absolutely brilliant. It will have its hiccups. Time will sort them out.
I think very well said. It is important to understand that this is more of a macro revolutionary thing. Yes, it will affect. As an industry, you take care of your nitty-gritties, but ensure that the GST comes in.
Friends, with this we take the new point on gold coin, which the minister announced in his budget speech that India will come out with a gold coin.
The Ashoka coin.
Ashoka coin, with the Ashoka chuck. It will be a coin with of our national pride. And Mr. Rajesh, I will request you to please let us know your views on what is happening on this, because you have some insight on this.
Well, actually, I don't have much insight on it, except that the government announced a design competition, and I believe a design is more or less ready. I won't tell you what it is. Let the government announce it.
You will not announce that you have won the contract or something?
No, on the contrary, I'm happy to tell you that we are not doing the India government coin.
No?
The India coin is being done by the agency that should do it, and that is the government of India, and therefore the India government mint is going to do it. We are not getting involved in the India coin. I have personal views on its success or its failure, but notwithstanding that, in the first place, I don't know why government thought of this, because governments don't get into doing gold coins. The business of government is the business of currency management, circulation coins. The business of government is not the business of commemorative gold coins.
Many countries have their coin, no?
Yes, but I don't think you have governments involved in it.
No?
No.
Okay.
They are outside the purview of government.
But you must be knowing where it started from, where it is.
I have no idea where it started from.
No?
And don't for a moment think we were involved in it.
I think we have discussions during the, I think the 2 days where we can deliberate on this, I think a bit more.
All right.
To understand the genesis and the way I think it has come up.
So you can take this India good delivery issue.
Yeah. On the India good delivery side, I think everybody talks about that India should have its own standards, so that whether it is exchanges, consumers, and etc., they need not depend or rely on something which is outside. Only a few of them are recognized. Is there a possibility, or is there a case for India good delivery? I think in terms of thought, LBMA did help the entire the China part, and to have the SGX have something defined. Is there a case for having something like that in India? Is there a case for having something independently, etc.? Is where I think I throw it open to the panel. That I think what are the thoughts and etc. Nija ma'am, I think you like to take a lead.
See, as far as I am concerned, since I am not the end user, I am only a conduit, like for GDS, IGM gives the bars to us and we give it to jewelers. So yes, there are some parties who are not happy with that and they only want LBMA. But yes, there are people who are quite okay with it. So whatever is okay with the jeweler community, I'm okay with that.
So you are neutral to it. Let us hear some wisdom, words of wisdom from you.
Yeah, now it's a good beginning. We have to look at India Good Delivery, way it has been done in Singapore and Dubai is planning. So we get some standardization in the basic raw material also. And if our monetization and other schemes succeed, and way we are seeing that we will be importing, we may be collecting more than what we may be able to consume in loan and all that, then a good delivery bar or an India Good Delivery bar will have some standard acceptable bars internationally also. So it's something which the exchange are looking at, rather than having each exchange having their own good delivery and we not being there. Let's have a forum together, as we were saying, and make a India Good Delivery bar. Whether BIS looks after it or somebody else promotes it, but it is necessary for India, not only in gold but also in silver.
I think many of the regional market have tried, and I think the kind of expertise and knowledge and LBMA has, I think creating the same kind, I'm not saying it's not impossible, but I think India should look at leveraging that knowledge and which is already has been created. And in my view, and it is just personal view, is that it is something which is, I think, the most critical part amongst many of the LBMA. So I think India, and India means what? I don't think there is any India means particularly, is it MCX, is it NCDX? I think they already have some kind of arrangement, or they follow something which is a subset of LBMA Good Delivery. So in my view, I think I will go what Sekhar said, leverage what we have today rather than reinvesting and reinventing, because this is very critical and very intensive with respect to knowledge, expertise and experience. What we have, I think it's worked closely with LBMA, and we have Ruth and our chairman, I think, and they have extended the support or started working with the Shanghai Gold Exchange. So that is another development. It means they are looking to work with the Asian market, and India being such an important market, means that's totally my view.
I just agree with the comments of the last gentleman, and there's no reason why, as the LBMA is doing with, as has done with Shanghai, is that you can't create your own local good delivery market. The issue for the LBMA is that we're a global market, and the central banks and the international bullion community accepts LBMA bars globally. But if the market is for India, is to support the Indian jewellery market, and that gold is consumed, refined, used, consumed, refined within India, there's no reason why it can't come up with its own delivery. The question then becomes if the Indians start to want to export large bars or big bars into the international community, and that is where the LBMA will come in.
Thank you. Thank you, Grant.
I just have one point to make on this. I agree with Grant. The big problem that, and this was also debated during the interactions with the government when they initially started inviting people from across the spectrum of the industry to discuss on both the monetization scheme and the bond scheme. Right now in India, there's no agency who is responsible for setting any kind of standards for the refinery. While the BIS does it for the jewelers and set standards on what can be a hallmark jewelry, nobody is there. The refinery side in terms of local regulation is totally orphaned. So one of the important things that one needs to think about is there some agency who can be made responsible, be it the BIS or be it some other agency or a new body that's formed? Because there's no LBMA type of organization within the country. They have a very rigorous standard when they grant accreditation to any refinery. So the big thing for all the refineries, and now given the fact that there are almost 25-30 of them within the country, We need to set up some agency who is responsible for setting standards and then have the ability to monitor and see whether these agencies have, or these refineries have met that standard.
Have you something in mind how to go about it?
Well, we can take some examples from refineries across the globe. We have an accredited
Best
refinery
practices
within
being
the
followed
country.
by others.
So you can disseminate knowledge and then create a standard. And the important thing is not just creating a standard. The important thing is the ability to monitor it on an ongoing basis to make sure that that refinery produces as per the standard set.
Yeah, I think we should hear from Michael the perspective on the good delivery side, being in India and I think sitting outside
And how
India.
to achieve it.
And the way I think we should proceed on it.
This is, first of all, my very personal view. I think India should not waste its time by creating a standard just for India when we have good and valid standards which are valid all over the world. So if you're gonna go for a standard, let's not do the same mistake as Dubai. Let's go for the international LBMA standard. It might be a bit harder to start with, but a lot more beneficial at the end.
But there are some important points that were raised, particularly on the monitoring of any standard. I think ultimately that is so important. You need to set the standard high, but you also need to have the leverage to ensure enforcement. And ultimately, LBMA, that has been our number one job since we were created 27 years ago, was making sure when you buy gold in London, that's what you get. And that ability to leverage because of the size of the market has been important for international trading. There are other models out there in terms of how do local markets deal with the fact that you have other refiners who should still be competitive, but they want to still maintain the international standard. I think Turkey is a good example of where they license the LBMA good delivery list, but they also have separate accreditation for smaller refiners who would have no interest in selling into London, but are certainly appropriate for the local markets, for jewelers, etc. But I think we do have to be careful in looking into what's good delivery for a jeweler versus good delivery for an international bullion bank.
Since these words are coming from LBMA, so we can consider them as final verse. And we understand between the lines that you have offered that you will provide us this facility free of cost. Thank you very much. One point which is about PAN requirement, which is disturbing to all of us.
The permanent account number?
Permanent account number on a 1 lakh rupee purchase.
Yeah.
We want to know your views. What is the right amount? How do we go about it so that both sides are balanced? Not that their sales suffer, they themselves suffer. So on that account, Pradeep, would you like to throw some light?
I think it is extending to what we had on the KYC front.
No, I
think
think
a bit of a discussion.
200,000 for bullion and about 500,000 for jewelry is a good number.
500,000 for jewelry and
200,000 for bullion.
Why less for bullion? You don't like bullion?
No, generally when the government looks at it, is
it not discrimination?
No, it's not discrimination. I mean, jewelry is basically sometimes you look at it as, all your making charges and all of that, and jewelry is, furthermore for consumption than actually an investment. So to basically not incentivize people, generally they have this kind of differential thing. But when you buy bullion, it's purely for investment. And that's why they want to basically say that, okay, lesser amount.
Bhargav, what is your take on it?
I'll ask one question. How many jewelers can identify whether I am giving right PAN number or I am giving Mr. Jindal's PAN number if I go and buy anything from them? I'm really worried about wrong queries which will come across the board in this country, because when this PAN number came in, I had seen in certain cities that people used to take photograph of the railway booking, because the Tatkal booking we have to give some identification. Maybe today I made a mistake. This is the first time when I checked into the hotel I gave my PAN card. Otherwise I don't give my PAN card because this has been grossly misused. So if you ask for figure, I like to say 5. Another reason is we had this debate across in Bombay, and one very, very old jeweler from Maharashtra explained us this reason. That he says, in our place, we have people collecting money over a period of time. You know, that's a monthly deposit of 10,000, 20,000, which is done. And after 2-3 years, that lady collects that jewelry for her daughter or son's wedding. And this saving is not known to her husband. If this is reported in PAN and it comes into the AIR, when the amount becomes 1 lakh or something, this saving will go. And perhaps this money will be used for something not productive. Looking at all these things, I think if it's a check payment, there should not be a requirement of PAN. Only if there is a cash payment, then PAN above 5 lakhs is necessary. Otherwise, in check payment, the banking system is good enough. Please don't put additional burden on a jeweler who cannot verify you are getting the right PAN or not.
But you also will have to appreciate the way the government, I think, when these regulations were formulated, the policy on gold was a bit different. India was under current account deficit challenge.
This 1 lakh is across the board.
Yes.
What we had issues is that if I have to go and buy some life-saving drug or some injection, that used to also be 1 lakh. And whose pen I give? The person who's sick, or I am buying for a friend, mine or that person. So we had a lot of issues why it has gone down. And I know because on that day I did file a representative saying that I had to go and buy this medicine at night, whose pen I give. And if I don't know the pen of the person who's buying, will he not sell me that medicine?
But understand the bigger agenda of the government on the black money. They are saying that any spend which is more than 5,000, they would like to implement a few things. Yes.
So you yourself are saying that if I pay through check or a credit card, they should not ask for it. So only on cash payment, above 5 lakhs, you have a pen. It's fine.
I think any international perspective, Amar, on something like this, it is there, not there?
Definitely cash is there, but because every account or every person in the international world has a unique number. Almost more or less the same number is, I'm more talking about Singapore, that's the experience I have. That is the number which translate kind of like your unique number, whether it is your account related or anything else, even in tax. So if you deposit more than X amount cash, they ask for a sometime copy of your IC, which is identity
And I guess
card.
they do charge some amount also to your, so there's a disincentive to deposit cash over there.
I don't have experience, but honestly, I am not the right person to comment on it. Yeah.
Sure.
Thank you.
We have some questions for audience poll, which we'll take, and some questions from audience also. 3 questions from audience we'll take, and then we'll come to the polling thing. 3 questions, if you have on the topics which what we have discussed and what we have not discussed also, you can ask, please.
I am Himanshu. I am from Delhi, Manoharlal Jewellers. My question is from the gentleman in the beginning. So when you say that 70% of the gold is in rural India, I want to know, what do you think why it is so?
Why it is so?
Yeah, because my question is that it is so because in India,
There's
the
not enough
literacy
banking
rate
staff.
is so less and the confidence on the gold being physically available in the hand is so high that I doubt that gold will come out.
And the banking system is not fully developed, and I think
No,
a lot much
people don't. Today, people forget about their LIC policy papers. It is only from the LIC company that they learn that okay, my policy has been matured. So right, and our systems and basically the awareness and evolution as society is so not up to the mark to come to a very systematic way of depositing. So my observation is that this policy will not take off.
And you think we will never improve?
No, I don't think. I never said that.
Bhargav bhai.
I am a die-hard optimist. So I believe that if not 25,000 tons, out of which 70 is there, even if we start at 0.25%, we'll be better off. And if it is a sovereign bond, I'll just ask one question. How many accounts were opened by the banking system in rural areas also under the Prime Minister's request?
Before Jan Dhan.
So we can change it if there is an intention to change. The way education is spreading and the intention of the banking system or the government is there, we will be able to do it. let's not be very successful, because if we collect too much gold, our asset value will go down and our currency will also go for a very big 6.
I'm Rajesh Kolawar from Hyderabad. My question to clarification required from Mr. Bhargav Vaidya related to GST. As you know that now if we are importing bullion is 10% custom duty. If importing dore bar, 8% custom duty for the promotion of refineries, right? If GST is imposed, as per the plain reading of draft, GST means equivalent of excise duty plus VAT. As of India, on gold and gold jewelry, excise duty is 0, VAT is 1%. So how you can set up the refinery business and import business with the parallel with the GST?
If you look at the plain reading, a refined gold bar of 8% you will get a credit if you are using in jewelry, because jewelry excise is 0, not nil. But if you look at the presentation which Commerce Ministry has done after discussion with the so-called export promotion councils, is that the gold duty would be considered. On plain reading, I fully agree with you, but the excise of 8% would be covered.
No. The refinery is not paying the excise duty. They are paying custom duty of 8%.
No, if there is a local dore, suppose there is a local dore.
For the benefit, your benefit and the benefit of the people in this auditorium, there is an excise duty. The current duty structure requires you to pay an 8% CVD when you import dore. When you've refined dore and converted into saleable gold, there is an excise of 9%, of which the 8% is a CVD. And therefore, if you look at duty differentials, the answer is A, there is an excise duty, the excise duty is 9%. B, there is a duty differential, the duty differential is 1%. Thank you.
And there is an international question from Mr. Michael Misarik now.
We were talking about all the schemes, saving schemes and bonds. What is the security for the one who hands in his gold in case there is a political crisis, there is a banking crisis? 2008 we have seen Shears and Lehman collapsed. Everybody who had his gold on a metal account has lost his gold, and that's when the big shift started to take place also in Switzerland. All these banks converted the metal account gold into physical, and the clients keep the gold physically in a vault. Now, how would that work in the Indian case? What is the insurance the client who brings the gold to the bank has?
I think very valid point, Michael. I think I can answer that, and then I think someone can add that. I think there is a fixed deposit. There are other deposits which of customers are already there in the banking system. So be it a public sector bank or a private sector bank. There are regulations which do define that. But to answer your question, in case there is the worst case scenario, then I think it will be the same treatment as is applicable to a fixed deposit or a deposit which is kept by a customer.
So it's better to have the gold around your neck and forget about the 2%.
By that logic, you should have cash also, I think, along with you at your home and put in the bank. Sorry, I think anyone would like to add? And no, one is sovereign bond. I think a point which Bhargav Bhai is making is, in case it is a sovereign bond, it is guaranteed by the government of India. So yes, it is issued by, but I think that is only limited to sovereign bonds, not with a normal gold monetization, etc. I guess your case was more for gold monetization.
My name is Anshuman. I work for NCDEX. I have two short questions. The first one is at the very outset of this discussion we had a tete-a-tete between the lady, Madam Nirja, and Mr. Nagori, where she said she can't afford more than 1.5% for as a return for gold GMS. And Mr. Nagori said that anything above 2.5% would be attractive to the consumers. Now, in such a scenario where you cannot arrive at a common ground, can I know the opinion of the panel?
No, don't worry about that. Market forces will decide it.
Exactly.
They haven't decided yet.
Yeah.
Market forces will decide.
Can we not have a secondary market kind of thing where the market forces decide as to what the rate of return should be? I have another question.
Today, if bank wants more deposits, they increase the rate of fixed deposit. They get more. They don't want any more. they decrease the rate. Each bank has the possibility to take whatever they want, and they decide the rate on how much they want, how much they can handle. Similarly, this thing will happen. It will not be a fixed rate. If they want more gold, they may make it 2.5.
But that has not happened in the GDS, sir. That's why I asked the question.
It has
the
not
present
happened.
GDS of that's being offered. There's a fixed rate for the present GDS. That's why I made this question.
Yeah, that's because we've not found it very profitable. That's why we have not increased the GDS rates. So that's why somebody was saying that maybe the government can give us an interest subvention if they want to popularize this. Or if they give a CRR, which is not there right now. That's why I talked about the CRR. If they allow the
but
CRR,
you will see,
I can give.
if she doesn't increase the rates, other banks will take this gold away. So don't worry, market forces will decide finally.
Can I have another short question?
Another short?
Yes.
Okay.
No, see, at present, if you see, no other bank did come up. Only Bank of Nova Scotia has recently come, and it was only Canara Bank and IOB. So obviously the market did not find it good enough.
The other one is there was a bit of a discussion around the sovereign gold bond and hedging for the government, which is raising money against such bond and having an exposure to the price of gold. There are a couple of alternative models as to, does the government really require the money that it raises against such gold, or can the government not park this risk that it owns itself to some other intending party, as in, for example, there are the public of India who want to own gold, the government would raise money from that and pass on this risk to intending jewelers who want to take, means the present gold loan customers, the jewelers who take gold on loan. This very gold which is raised from the sovereign gold bond can be passed on to these people and they can use it. So the government really doesn't need to have this risk of gold price on itself. Can we have such a model? That's what my question
things
was.
are being worked out, and finally you will see something which is doable, a workable policy, and all these points will be taken care of. What we were discussing here is how they look at it. What finally will come, it has to be a doable policy, otherwise it will not be successful. So it is too early to discuss on this issue how it will be dealt with, but they will be covering all aspects of it, and I have got 6 very interesting questions where we need your poll, and you will see for yourself what is the opinion in general on these issues. So can we take these questions one by one, please?
Have instruments in your hand. I think there are numbers and etc. over there. And as soon as I think the question is put up on the screen or by Mr. Jindal,
Satish,
you have to
there
just
is an additional
press
instrument
1, 2
available.
and 3.
Don't use it, please. Only one.
So the first one is putting gold accumulators under GMS to be considered as a part of reserve requirements by the bank, so-called as a CRR or SLR, is important for the success of GMS. Agree, disagree, or not very sure of? 1 for agree, 2 for disagree, 3 for not sure.
And your time has already started.
The time has started, you are 8 seconds short. I think the audience says that they agree with the thought that it should be part of the CR or SLR.
Let's hear for the audience. Take the second question, please.
Section 114B of the Income Tax Act on applicability of quoting permanent account number, thing which we are discussing for transactions in bullion about 2 lakhs and jewelry about 5 lakhs should remain at the current levels or should be revised down to 1 lakh. So the question is, should it remain? Then agree, and it should be revised to 1 lakh, then one should press disagree. The time starts now. Last 8 seconds. Yes, 64 and 36. The audience is the winner. I think I am the loser.
They don't agree so much with our panelists.
So, but I think it is a good surprise.
But we respect their view.
And I think it is a good part. I think the other view can be that it is a transparency which they'll want to have with 100,000. And they would want to have the industry being cleaner, better, and I think progressive. So I think a good round of applause for the audience. I think being very pragmatic.
The next question, please.
Yeah. I think the third one, in all the foreign trade agreements, jewelry should be placed under negative list. It means that they should not have preferential rate for import. Example, I think if you import through Indonesia, the rate of duty is 1%, normal is 10%. Example. So you agree that it should be placed on a negative list. If you say that it should be in a negative list, press agree. If you don't, disagree. And if you don't want to comment, press 3. The time starts now. Yeah, let us have the results now. So I think a decent part says that I think 68% of them that it should, they would like to disagree or agree with the thought that it should be part of negative list to ensure that the industry is sufficient enough.
Clearly shows 20% of people were importing under FTA agreement.
Very rightly said. So thank you.
I think take the next one.
Yeah, we take the next one. But good results. I think this is something which is with what we call the consumer is the king. We at times don't know much. Question number 4. How much quantity do you think the government should allow without any source declaration or KYC or no question asked? This is in terms of grams. 1, 30 grams, 2, 100 grams, 3, 200 grams. How much quantity? I think what is the government should commit? How much quantity? This shows India. And I think the people who should laugh is Grant. Grant, it is a big surprise for you.
No, what this indicates is the generosity Indians have. They are not looking for small figures. They love big figures.
And the John sitting at back is actually, I think, similarly, totally surprised that I think what is happening. John Reed, very similarly thinking that I think 200 grams is the minimum quantity which India wants. But it's a good thing. People say, I want to have minimum 200 grams.
It is called practical outlook.
It's called the practical outlook.
We respect your view. And let's hear for you one more time. Next question, please.
Next question. I think this is the second last one. So, are you looking forward to participating in this scheme? I know there are very few ladies over here.
But no, Madam Nirja has already agreed.
I agree, she has. But it is one lady, one vote.
And she was on camera when she committed.
And so, are you looking forward to participating in GMS when announced? I think the time starts now. 1 yes, 2 no, 3 I think we'll think about it. I think excellent voting, 146 votes is what it came in terms of the overall, and let us see the results. Wow, I think this is the toughest one. 43% says yes, 40% say no, and there are people who are thinking are the ones which are going to decide that it should be. So they are this is called the Indian voting. Indian elections always have something like this.
Hung election, hung results.
It's a hung parliament.
It's a coalition government. Hung parliament.
But I think a good one in terms of assuming that even in spite of the fact very few ladies.
But 43% also means passing mark. So the scheme will be successful. At 40 we are passed, no?
No, I think this is a team which would like to participate. I assume people outside are much more wanting to come in over here. We are dealing with millions of people.
No, it takes time. They will change their mind after having what they hear today. They will mull over it in the night. Tomorrow they will have different opinion. They will be more towards the first one. Okay, the last question now.
The last one, do you want GST to be announced ASAP, which is the goods and services tax? Do you want to be announced as soon as possible? 1 yes, 2 no. The time starts now. I think people much clearer over here, 156 votes for this particular part. Yes, and let us have a look at the results. So this is a good one, 86% says yes, 14% says yes, they would like to wait.
14% are from VAT department it seems. They don't want GST to come.
At times there may be business in ensuring that the GST doesn't come in.
All right friends, with this we come to the end of this session.
Thank you very much.
Thank you very much. And let us hear from my panel and from Mr. Shikhar. Thank you very much.
Well, thank you, gentlemen. Requesting your presence on the stage for just the next 1 minute. I would like to thank Mr. Jindal and Mr. Bhandari for moderating this so beautifully. Gentlemen, we would like to request you to please present a memento to each one of our panelists. Would like to request Mr. S.K. Jindal to please present a memento to Mr. Rajesh Khosla. To present a memento to Mr. Pradeep Nagori.
Mr. Jindal presents a memento to Mr. Rajan Venkatesh. Mr. Shekhar Bhandari presenting a memento to Ms. Neerja Nigam. Mr. S.K. Jindal presenting a memento to Mr. Bhargav Vaidya. And finally, Mr. Bhandari presenting a memento to Mr. Raman Singh. I would like to invite Mr. Grant Angwin to present a memento to both our moderators.